check, 1, 2. Check, 1, 2. Check, check. Mic check. Check, 1, 2. Check, 1, 2. Mic check. 1, 2, 3. Check, 1, 2. Mic check. 1, 2, 3. Mic check. 1, 2, 3. Dear analysts and guests, ladies and gentlemen, thank you for joining us for Aboitiz Equity Ventures Analysts Briefing. We will start our program at 5 o'clock p.m., so that's 9 minutes from now. Please settle down as we begin very shortly. Should you want any cup of coffee or refreshments, please step outside and be back here by 5 p.m. As again, we will start our program promptly at 5 o'clock p.m. Thank you very much.
Year after year, one thing has remained constant. Our goal to ensure meaningful economic development and uplift the lives of the people we serve. Amid the changes, we continue what we've set out to do. We believe in an enterprise that reflects our culture, our values, our core. We take inspiration from our past. And usher in a new era of progress. Our balanced pursuit for financial gains and sustainability reflects our rich history and our fruitful journey. It shows our commitment to the country's future. The difference we make defines the work we do. Every time we energize our cities, fulfill the dreams of the many, forge genuine partnerships, connect ideas, design experiences, and solve our toughest challenges. We drive change for a better world. By staying rooted in our values and understanding the community's needs, we are able to create an impact that is felt beyond borders. A change that transcends generations. A legacy that will stand the test of time. And as we conquer new horizons, we look back to where it all started. From a small town in the Visayas, to our journey to become global, we will remain at the helm. Our next century defined by how we break conventions, rethink the usual, and push the boundaries of possibility. Because our business is your story of firm foundations, purposeful growth, and the future that we share. Aboitiz, 100 years of advancing business and communities.
Dear guests, we are showing on screen now the emergency exit plan for your reference. Please note the details in this slide in case any unexpected incidents happen. Thank you very much.
Okay, so good afternoon, everyone. So welcome again. For this part of the day, we are going to report on the consolidated financial and operating performance of Aboitiz Equity Ventures. I would like to repeat some of our house rules. So questions have been requested from our guests in advance, which we will address during the Q&A portion of this event. We will also entertain live questions from the audience if there are any. And finally, questions that we are not able to answer during the Q&A session will be answered via email. So we are now going to report on the consolidated financial and operating performance of Aboitiz Equity Ventures, as well as our non-listed businesses, namely our food group, Aboitiz Land, and Aboitiz Infra Capital. Again, we would like to remind everybody this portion of our event will be recorded for documentation purposes and will be uploaded on our website after this event. By joining this session, you consent to your name, voice, and image being recorded for use and dissemination. If you do not consent to the foregoing, please do not join the session. So to present for food, we have Mr. William Paradis, COO, Food and Nutrition, Philippine Country Director of the Food Group. To present for land, we have Mr. Dave Rafael, President and CEO of Aboitiz Land. To present for infrastructure, we will have Ms. Cosette Canilao, President and CEO of Aboitiz Infra Capital. And to present the group's consolidated financials, as well as to give us an update on our acquisition of Coca-Cola Bottlers Philippines, or CCBPI, we have Mr. Toto Hilado, the CFO of Aboitiz Equity Ventures. At the end of the presentation, we will conduct a satisfaction survey and then proceed to our Q&A session, where we will address questions related to AEV and its non-listed businesses, as well as our CCBPI acquisition. Questions related to our other publicly listed companies, namely Union Bank and Aboitiz Power, will be addressed offline after this briefing. So before I turn you over to Mr. William Paradis, we will kick off the food group's presentation with a video.
Is playing catch with my buddy Jack.
The best part of my day are memorable cuddly moments with my baby Jill.
The best moments are created when you give your best friend the proper nourishment and care. Maxime is fortified with essential nutrients so that your pet stays happy, active, tough, and smart. Max the fun. Max the love.
Great catch.
Live the best life together with Maxime.
Go. All right. Good afternoon, everybody. Thank you for being here with us. I'm standing in for Tristan, who's out sick, who usually does this. So let me start by taking us through the Food Group's financial highlights for the year 2023. Food Group ended the year with a net income after tax of 1.3 billion pesos, which was a large improvement over the year prior. This was due to improvements in margins, both from our agribusiness and flour units, and notwithstanding the challenges affecting our... Okay, sorry, is this better? Notwithstanding the challenges affecting our sales volume across almost all business units. The full year saw total revenue decline by 4% year-on-year, driven by reductions in both food and nutrition sales, along with decrease in revenue from our regional agribusiness unit. Key contributors to the decline in food and nutrition were our flour and trading divisions. However, comparing quarter on quarter, Food Group as a whole was able to sustain an uptrend in revenue throughout the year. EBITDA was up 8% year-on-year to 5 billion pesos, driven by a 26% increase in contribution from the agribusiness unit, which was toned down by the food and nutrition that posted a decline year-on-year on losses mainly from the farms business. Correspondingly, EBITDA margin was up 57 basis points year-on-year, and quarter-on-quarter we saw improvement throughout the year as margin came up from just above 1% to end the year at 5%. In spite of the challenges in volume as well as a high interest rate environment, the Food Group finished 2023 with a better bottom line due to active management of our pricing strategy as well as cost efficiencies. Food Group's revenue decreased 4% year-on-year to 101 billion pesos, pulled down, as mentioned, by the lower sales from both units, agribusiness and food and nutrition. Food and nutrition business contributed 17.6 billion pesos, which was 9% below the prior year. Revenue reduction in our flour division was due to decline in demand for flour products due to higher prices coming off of the prior year with record high commodity prices. Farms, meanwhile, improved slightly as volume increased with higher demand in the second half, and our agribusiness unit delivered a total of 72 billion pesos in revenue, which was 10% lower than the prior year. Demand challenges were felt from both our aqua and livestock segments as a reduction in swine population around the whole region was felt, bringing lower overall consumption of most classes of protein, which had an impact all the way down the chain. In terms of revenue contribution, however, agribusiness continues to be the main driver of the total food group, contributing consistently around 3/4 of our business. With regards to EBITDA, our EBITDA showed an 8% increase year-on-year to 5 billion pesos, owing to the 26% jump from our agribusiness unit, which offset the decline in food and nutrition. Both our flour and agribusiness divisions' operating profits showed a sustained improvement well into the year, despite challenges from volume. Flour margins improved as commodity prices leveled off from record highs in the prior year, as well as effective cost management. Agribusiness unit margins improved as well as a result of the same trend in commodity prices. This, along with benefits from formulation cost reductions, SKU rationalization, and lower production costs, resulted in the mentioned overall improvement in EBITDA, more than making up for the slight reduction in revenue. Our farms division ended with a negative EBITDA of 573 million. This was dragged down by a number of factors, mainly by the cost of underutilized assets, as well as a sharp drop in selling prices in the second half of the year. On the other hand, trading division also ended in the red due to a decline in volume from lower demand, as well as lower margins from dropping commodity prices. As for our NIAT, again, Food Group closed 2023 with a net income of 1.28 billion. This is an improvement from the 8 million in the prior year. And also on a positive note, a reversal from the net loss position that we began the year at over 500 million in the first quarter. Now, please allow me to update you on some of our key projects. First would be, I think you can go already to the next. Yeah. So let's start with our agribusiness division and the construction of our Yunnan mill in China. The lease of our current plant in the area in Kunming expires in April 24. So we're constructing a new feed mill to replace that capacity, and it will also be better located. The Yunnan mill has a capacity to produce up to 150,000 metric tons of livestock feed per year. And part of this additional capacity includes an additional ruminant production line and a mash conditioning line, which will allow us to enter into new segments of the feed market region in this region. This facility can also be expanded to produce up to 70,000 metric tons per year if we choose to expand. The schedule is on track to complete commissioning next month, and commercial operations will start the month thereafter in May. Another important project that we're looking forward to is the construction of our new feed mill in Long An, Vietnam. The Long An mill will give us the ability to grow the livestock feed business in the southern region of Vietnam. This mill will have a capacity of up to 200,000 metric tons per year and can potentially be increased by another 100,000 metric tons. This facility will supplement the production already existing from our Bindong and Dong Nai plants, which have a combined capacity of 132,000 metric tons and are currently running at full utilization. Schedule is likewise on track to commission this month, and we are looking forward to the production for this new line shortly after. As for the farms division, we also continue to grow our meat brand, The Good Meat, and develop more channels. We opened 3 company-owned branches and 4 franchise locations in 2023, along with 45 new supermarket concessions. Our product is now available throughout various digital platforms, along with our physical channels of our own stores, franchises, and network of over 200 supermarkets. So to recap, our business segments across the region face challenges as demand softened coming off of peak commodity prices the year prior and into the first quarter, which led to a reduction in demand and hence a reduction in the top line of 4% year-on-year. Despite the lower sales volume as well as a higher interest rate environment, though, the food group managed to improve EBITDA as a result of improved input costs throughout the year and effective management of both selling prices and cost efficiencies. For our farms division, the recovery will be seen with better asset utilization as we repopulate one of our breeder farms, which was empty last year, as well as having full production from our new Breeder Farm 3 site, which was only producing for part of the year last year. We also continue to build up our channel development and increase our mix of branded product to earn better prices. So that's it for the food group. Thank you very much.
Thank you so much, William. May we now call on Mr. Dave Rafael for Aboitiz Land.
Thank you.
We believe that where you are shapes who you can be. So we innovate to create spaces that inspire, leading people to homes where they can thrive as a family, flourish as a community. We innovate to serve you better, so you can live better and live for the future. Aboitiz Land. Innovating ways to lead you home.
Good afternoon, everyone. I'm here to present the performance of Aboitiz Land in 2023. So, based on the key operational and financial metrics of Aboitiz Land, we've met most of them. Residential sales was almost the same as the previous year. However, revenues climbed by 1% at 3.9 billion. Gross profit improved from 1.5 billion to 1.7 billion. And our core EBITDA also improved by 12% from 908 million to over 1 billion. So 2023 was another banner year for Aboitiz. This was the 3rd year in a row that we were able to maintain our good sales performance. We were able to hit close to 5 billion in gross sales in 2023. In terms of operational milestones, next slide, please. Okay. So, as I said, in sales, we booked 5 billion in gross reserve sales. We were able to again improve our conversion rate of these sales to 92%, because of some of our Vecino app and all the other innovations that we've been introducing, and also a booking efficiency within 14 days. We've also been ramping up our foray into international sales to really tap the overseas Filipino market. In 2023, our sales from international sales went up to as much as 26%, whereas in the previous year, it was only at 12%. In construction, we continuously look for new technologies, new innovations to improve our construction. So we've tapped this precast panel construction, which really reduces the duration and the quality of house construction. We've reduced turnaround time of house acceptance by 57%, and most important, in spite of increasing labor and construction costs throughout the year, we were able to maintain our construction cost budget and therefore maintain our margins. In terms of collection, we recorded a record collection of 3 billion, which is 16% higher than the previous year. So this is largely due to, again, new innovations like our RFTO database and Gaviti. And in terms of customer service, we're really proud to say that we're improving our customer service as we continue to digitize that part of our business. We maintained a full year customer satisfaction score of 81, faster response and resolution times, 50% above SLA targets. And we've launched the digitized property management service via the Vicino properties. Next slide, please. So in 2023, we continued to garner a lot of awards from various award-giving bodies in recognition of the quality and the quality of our projects in the different parts of the Philippines. Okay, next slide, please. So in terms of new launches, last year we only launched 2. We launched Privea Hills, which is an existing project, but this was a new phase in Privea Hills in Mandaue. So it sold very well. We sold nearly 50% in a matter of 3 months, so almost 900 million in gross reservations. We also launched the Strides, which is a medium rise, it's 3 buildings, 3 condos, all medium rise in the Villages of Trapa, which is right across the Lima estate. So we launched it late last year, and we've already sold 50% of the first building, and we're going to be launching the second building this year. Next slide. So Aboitiz Land will continue to do what it's been doing all these past years. We will continue to harvest the existing inventory of our projects and really try to finish it off. We will maximize group land bank. There's a lot of land bank within the different Aboitiz companies. So we have been tasked to really try to maximize value from all of these different lands. And also, last year, we had a 50-50 joint venture in a co-living business called Point Blue. But this middle of last year, we've decided to buy out our partner. So we are now in full control and operations of our business called Point Blue, which is mostly located in BGC and in Makati. Okay, next. So in summary, key takeaways. So I said Aboitiz Land has continued to, in 2023, met its key operational and financial metrics. Data-centric approach in sales and collections enabled the business to surpass prior year performance, while innovations in construction and customer service lead to reduced turnaround time that increased overall operational efficiency. Aboitiz Land has earned accolades as one of the best employer in Asia and for developing exceptional projects in the country. In 2024, Aboitiz Land will focus on harvesting from its current resources to achieve sustainable financial growth. And lastly, Aboitiz Land maintains a cautiously optimistic stance towards the future growth of the business and the real estate sector. Thank you.
Thank you so much, Dave. For Aboitiz Infra Capital, may we call on Ms. Cosette Canilao.
good afternoon, everyone, and thank you for joining us in today's briefing. I am pleased to report that 2023 marked a significant milestone for Aboitiz Infracapital as the company exhibited significant growth in all major key performance indicators, including revenue, EBITDA, net income after tax, and beneficial capex. This success can be attributed to the strategic investments in both new and existing assets, supported by robust performance in our four key sectors, namely economic estates, airports, water, and digital infrastructure. In economic estates, we are recognized as Asia's top developer of smart industrial mixed-use developments, attracting both local and foreign businesses and generating meaningful job opportunities within a complete infrastructure ecosystem. In airports, Mactan Cebu International Airport recorded its strongest post-pandemic rebound yet, as it offered more flights to cater to the increasing demand of domestic and international travelers. In water, we're proud of the much-awaited completion of our mega infrastructure bulk water project last year. In digital infrastructure, we have expanded our presence in the towerco industry through the nationwide development and operation of telco towers to boost connectivity. Now let's go into the AIC's financial performance. Please note that the figures displayed on the left side of the screen represent the contribution of AIC to AEV, while those on the right reflect the full performance of each of our four business units. This distinction is intended to provide you with a clear understanding of the scale of our operations and the critical drivers of AIC's growth. Aboitiz Infracapital recorded total revenue of 6.7 billion for the fiscal year, marking a significant 46% increase from the previous year. This growth was driven by income generated across all four sectors, notably boosted by AIC's acquisition of Mactan Cebu International Airport. Our economic estate business demonstrated exceptional performance in 2023, achieving revenues of 5.7 billion through robust industrial and commercial sales. Furthermore, our airports business significantly contributed to our revenue growth. Last year marked MCIA's initial full year as part of the AIC group, generating 3.6 billion. We expect our other two sectors to contribute more in the coming years, especially with Apo Agua's full commercial operations and Unity Digital's goal to double its scale and expand its footprint. Focusing on EBITDA, AIC delivered a total of 3 billion to the Aboitiz Group last year, reflecting a notable 43% growth from the previous year. This growth was primarily fueled by the two sectors, economic estates and airports, which generated 2.7 billion and 2.1 billion respectively. Additionally, the sector's EBITDA performance was reinforced by cost optimization and efficiency enhancements across all sectors. Transitioning to our net income after tax, or NIAT, we are proud to announce that AIC has surpassed the 2 billion mark for the first time, driven mainly by the remarkable performance of our economic estate and airport sectors. Looking ahead, we anticipate continued growth and substantial returns from our investments as we focus on optimizing our assets and seizing more commercial opportunities across all our four business verticals this year. Heading now quickly to each of our business sectors' performance milestones. Through strategic expansion, smart and sustainability initiatives, and the introduction of enhanced offerings, AIC's economic estates has successfully positioned itself as a preferred partner for businesses seeking complete integrated infrastructure solutions. As of end of last year, our economic estates boast an impressive portfolio of over 1,600 hectares with more than 200 locators nationwide. It also helped stimulate local employment with over 100,000 jobs generated. Moreover, it successfully launched two key initiatives in our Lima estates in Batangas. These are the pads at Lima, a 600-bed dormitory exclusively built for locator employees, and the Red Link Shuttle Services Hub, providing sustainable and efficient transport around the estates. These initiatives are aimed at enhancing the living experience and address the housing concerns of the employees of our locators. Our new Tari estate in Tarlac will soon add 200 hectares to our portfolio, further expanding AIC's economic estates nationwide footprint. In the airport sector, MCIA experienced a significant rebound in passenger traffic last year, with the total passenger count surging to 10 million or 81% growth versus 2022 levels. This is attributed to the expansion of domestic and international destinations, totaling over 30 destinations served by more than 20 airlines. New direct flights to Hong Kong and Singapore launched last October 2023 also contributed to this uptick. With regard to the other regional airports, negotiations have been completed for Laguindingan Airport, and AIC is looking forward to rehabilitating and improving said airport. For Bohol Panglao International Airport, negotiations are ongoing and we expect it to be finished by the end of the year. For our water business, Apo Agua officially commenced full operations in February of this year. It is now the country's largest operating bulk water supply facility with a water treatment capacity of over 300 MLD. Lima Water has, on the other hand, Lima Water has successfully reduced its non-revenue water across all economic estates and has been recognized for its efforts in enhancing water efficiency management. We expect our water business to become a major contributor to AIC's continued growth in the years to come, as it is actively on the lookout for M&As and JV opportunities to expand its portfolio. Lastly, Unity Digital continues to strengthen its presence in the digital infrastructure space as it welcomed the new year with over 1,000 sites. The company has been actively deploying build-to-suit tower sites to complement the towers we acquired through successful sale and leaseback deals with PLDT Smart and Globe. Moving forward, Unity Digital will prioritize driving co-location across its towers to enhance digital connectivity nationwide. In 2023, we achieved notable recognition as a leading infrastructure developer and operator in the country. We received multiple awards across the region. These include Leading Infrastructure Development Company at the World Business Outlook Awards and the Circle of Excellence Sustainability Company of the Year at the Asia CEO Awards for the holding company. Our economic estates was recognized for the third consecutive year as the Best Industrial Developer and Best Industrial Development in Asia at the Property Guru Asia Property Awards. MCIA also became the first and only airport in the country to receive the Airport Customer Experience Accreditation from the Airport Council International in recognition of its excellent customer experience management and practices. In addition to our strong financial performance, we are pleased to report that AIC and its business units actively pursued various CSR and sustainability initiatives last year aimed at creating positive impact within the communities where we operate. These include providing free data annotation training for women to prepare them for remote online work opportunities under our partnership with the Connected Women, as well as a labor program in our estates that seek to train and link qualified job seekers to our partner locators. Noteworthy sustainability initiatives of our business units include securing a BERDE Stage 1 5-star certification for our Lima Tower 1 development, the solar panel project in one of Lima Water's treatment facilities, and Apo Agua's rehabilitation of the Panigan-Tamugan watershed to help protect Davao City's future water source. In summary, 2023 proved to be a truly exciting and fruitful year for Aboitiz Infra Capital as we successfully achieved the goals we had set for ourselves. As we move forward, we will focus on enhancing and optimizing our current assets across all sectors, driving growth by pursuing viable commercial prospects and leveraging synergies to provide enhanced value to our stakeholders. Our economic estates business is positioned for continuous growth and transformation. It continues to lay the foundation for an infrastructure ecosystem with the launch of new projects within our existing and upcoming assets, as well as enhancing our service offerings. For airports, we hold a strong sense of optimism regarding its growth trajectory, particularly as passenger traffic at MCIA is nearing pre-pandemic levels. With AIC's complete takeover of MCIA by the last quarter of this year, we are committed to enhancing service quality and setting benchmarks for airports nationwide. For water, Apo Agua will be increasing its production capacity and will continue to provide Davaoenos with safe and reliable water, while our estate water business will expand its facilities and introduce ancillary services. We recognize that prioritizing the exploration of new business opportunities is key to supporting future growth in this sector. Finally, for digital infra, Unity plans to further expand its scale and strengthen its base with a strategic mix of built and acquired assets, with a focus on promoting co-location. That concludes my presentation. Thank you so much for listening to me.
Thank you very much, Cassette. And now to present AEV's consolidated financials as well as discuss our acquisition of CCBPI, may we call on Mr. Toto Hilado.
Good afternoon, everyone. Thank you for joining us today. Let me now summarize the performance of AEV Group. 2023 was a remarkable year for the Aboitiz Group. Looking back, we can proudly say that despite the ongoing global challenges, we have continued to adapt, innovate, and collaborate, reaffirming our collective strength and determination to pursue our transformation. On top of completing our bulk water project and several renewable energy projects, 2023 marked our entry into the branded consumer food segment through Coca-Cola Beverage Philippines, Inc., and into the tower leasing business through Unity Digital Infrastructure. We are maintaining our momentum in 2024. In the last few weeks, we completed our acquisition of Coke, commercially operated Apo Agua, and announced our foray into the LNG space. We remain enthusiastic for what lies ahead in 2024. Let me now go to our full year 2023 earnings results. Net income came in at 23.5 billion, or 2% lower year-on-year. Core net income, on the other hand, was higher by 8%, driven by a 10% growth in EBITDA. Power and financial services took 85% of AEV's consolidated net income after tax versus 89% in 2022. This is consistent with our long-term diversification strategy. Our balance sheet continues to be strong and supportive of our expansion pipeline. Consolidated net debt to equity improved to 0.7 times as of December 2023, from 0.79 in December 2022, and our parent level net debt to equity remains low at 0.14. The 10% year-on-year increase in our beneficial EBITDA for 2023 was mainly driven by the double-digit EBITDA growth of Aboitiz Power, Aboitiz Infra, and Aboitiz Land, which more than offset the year-on-year decline in income of Union Bank. The 10% year-on-year growth in the group's beneficial EBITDA in 2023 drove AEV's full-year core net income 8% higher to 22.1 billion. However, if we take into account non-recurring gains, mainly arising from FX revaluation of assets, net income was slightly lower by 2%. Non-recurring gains in 2022 reached 3.5 billion compared to 1.4 billion in 2023. Our balance sheet remains strong and poised for our future growth. Total assets increased by 2% to 827 billion due to increased investments in Aboitiz Infra and our participation in Union Bank's SRO. Total liabilities remain flat at 452 billion, which resulted in the improvement of our solvency and leverage ratios. Consolidated current ratio stands at 2.2, while our net debt to equity slightly improved to 0.7. Parent level debt rose to 42 billion in 23 from 36.1 due to increased borrowings for our investments, including the Coke transaction, which financially closed last February 23. Despite this, the parent balance sheet remains under leverage at 0.14. For 2024, the Aboitiz Group, together with our partners, have allocated a total of 153 billion pesos in capital expenditures. This is more than double the 65 billion we spent in 2023. 73 billion of our total capex budget for this year is earmarked for Aboitiz Power, while the parent will spend another 40 billion for the acquisition of 40% of Coke. Another 26 billion is earmarked for Aboitiz Infra to fund its ongoing tower acquisitions and the development of its economic estates. The rest of the budget will be for airports, further enhancement of Union Bank's digital infra, the completion of food groups' capacity expansion projects, and maintenance of other businesses. This figure does not include our investment in chromite gas. On March 5 of this year, AEB approved regular cash dividends in the amount of 1 peso and 40 centavos per share to all stockholders on record as of March 19. This is payable on March 26. The total dividends payable for 2024 amounts to 7.9 billion pesos, which is equivalent to and consistent with our practice of paying 1/3 of the company's previous year's net income. Based on the closing price of 49 on the day our dividend was announced, this translates to a dividend yield of 2.9%. As part of our diversification in the consumer sector, we are pleased to announce that AEV, in partnership with Coca-Cola Euro-Pacific Partners, or CCEP, has successfully completed the acquisition of Coca-Cola Beverages Philippines Inc., or CCBPI, on February 23, 2024. AEV now proudly owns 40% of CCBPI, the sole bottler and distributor of the Coca-Cola Company products in the Philippines. A shareholders' agreement between AEV and CCEP with comprehensive governance terms is now in effect, ensuring a smooth integration and collaboration between our two companies. Integrating CCBPI into our portfolio opens up numerous opportunities for the Aboitiz Group. Not only does this strengthen our position in the branded consumer goods sector and generate synergies across AEV's wide-ranging business interests in the country, but would also enhance AEV's future cash flows, further priming the group's balance sheet for further expansion over the long term. CCBPI operates in a large, attractive, non-alcoholic, ready-to-drink, or NARTD category, currently valued at around $8 billion. In 2023, CCBPI sold 655 million unit cases and grew its revenues by 13% year-on-year to approximately 107 billion. I think it's the 8th largest market for Coke. This translated to operating profits of approximately 7.5 billion and profit after taxes of almost 5.5 billion. Given that the Philippines is the 13th largest country globally with solid GDP growth, a population of 115 million with 1.5% population growth per year, a young population, and fast-growing middle class, CCBPI's long-term growth prospects remain much intact. Let me now close my presentation with a few key takeaways. Over the last 3 years, our acquisitions have positioned AEV strategically in high-growth segments in the Philippine economy, which not only offer attractive long-term returns, but also enhance our internal synergies. In the near term, AEV will focus on optimizing the operations of Mactan Airport, City's consumer business, Coke, and Promite, while continuing to improve the profitability of our existing subsidiaries. Heading to 2024, we are confident that we can generate more revenue from the synergies that we can derive as a conglomerate with interests in power, banking, food, real estate, infrastructure, and fast-moving consumer goods for the benefit of our shareholders and our contribution to nation building. Thank you for joining us here today, and thank you for your continued support. Have a pleasant evening.
Thank you so much. So while we set up for Q&A, we would like to request our audience to complete a satisfaction survey, which you may access via the QR code on screen. The QR code on your tables labeled AEV, or you may also manually complete the printed survey forms on the tables, which we will collect after this event. So may we request our presenters, William, Dave, Cosette, and Toto, to please come up the stage for Q&A. Okay. So now onto our Q&A. Before we go to the questions we received in advance, I would like to check if any of our participants here or on Zoom would like to ask a question. Kindly raise your hand or click on the raise hand button so we may acknowledge you. Before you ask your question, we would like to request you to state your name and institution and the name of the person you would like to address your question to. Okay, so maybe we'll go first to our advanced questions. So this question is for Cosette. Given the group's appetite on airports, what is the outlook on domestic tourism for the Philippines?
Well, domestic tourism will still, I think there are some aircraft issues that the airlines are still experiencing, and but hopefully that will be resolved in 2024. We're working on, certain, I think that domestic tourism would still be solid, but again, impacted by the issues on aircraft availability.
Thank you so much. So next question is for Dave. We have two questions on land. So on Aboitiz land, what is the total value of launches in 2023, and is there a target for 2024?
As I mentioned earlier, we launched two projects, the one in Privea North, which is in Mandaue. The value of that is about, I would say roughly about 2.5 billion. And then we also launched the first of three mid-rise buildings in Lima, or the villages at Lipa. And the value of that, I would say, is approximately maybe 300, 400 million.
Okay, thank you so much. The next question is related to sales. So can you talk about some of the data-centric innovations that Aboitiz has implemented in sales and collection? And in relation to that, what is the group's strategy to further grow sales reservation for Aboitiz?
Okay, so what we've done is in the case of our, it's not just in sales actually, it's actually in all aspects of our business now. So, for example, in the case of sales, now what we do is we have this program called Fresh Marketer. So what it does is we get to it's a program. It is a that really tries to those that are searching in our website, no, it's able to determine their specific interest, what property they're looking for, what their budget is, and so forth, so on. It's called Fresh Marketer. So I think that's really been quite helpful, no. In the case of we've got this new app that we developed. It's called the Vecino app. It's something that we developed on our own. It's not something that we bought off the shelf. So what it is because when the pandemic happened, it's no contact and all that. So we said we immediately had to come up with a really contactless home buying approach. So at first it was just basically home buying, right? Just keep calling, but trying to sell to them online. But then we realized, we can take this all the way, not just from consumer, interaction to sell, but all the way from their being able to buy the property, get the loan, advise them, give them an update on the progress of their construction, all the way to turnover and so forth. And so we did all of that, and it's in one app called Vecino app. And that's something that we're quite proud because we're the only one. I think we're one of the few developers that has developed something like that. No. Another innovation but this is something that we got from Union Bank. No, because one of the challenges of real estate is people who buy, they pay the equity over 24 months, but after 24 months, they can't continue. They can't meet the bank's requirements for the takeout and all. So through this Union Bank pre-qualification tool, we're able to, with a high degree of confidence, be able to predict if this person was buying the property now, 18, 24 months from now, will in fact be able to get a loan from the bank. And it's proven to be quite an effective tool.
Thank you for that. I think we have a question from the floor. Eunice?
Hi, sir. For this question is for Sir Dave Rafael. You mentioned earlier that you're gonna focus on your existing inventory. Just on that, how much is your current inventory levels now in terms of size and value, and how do you intend to launch that in the next few years?
We have 3 projects in North Luzon, Cabanatuan, Tarlac, and in Pampanga. We've got 2 projects in the south, which is in the villages of Tipa and in Seafront in San Juan, Batangas. And we've got 4 projects in Cebu. No, sorry, I'm not ready for that answer. I don't know the total value of this inventory right now. But those are our existing projects. So what we're trying to do is there's still a lot of land that we haven't developed in these 8, 9 different projects. So that's what we're going to be focused on, in really building up and selling out all the inventory in those projects.
All right, so just a question now on infra. Out of the 6.7 billion income, can you just further break down on how much per in terms of the contribution per the major units on how it fared in 2023? And how do you expect this to change with the completion of Apo Agua and MCIA? Thank you.
Okay, thanks. So last year, I think, can you show the slide on that one? Yeah, so the contribution really came from what they call our economic estates. So on revenues, so the total revenue is around 6.7 billion, and the economic estates total revenue ba is more than, I think, the economic estates revenue was 5.7 billion. MCIA's revenue top line is 3.6 billion. So those are the main contributors to AIC's revenues. And what's the other one for this year? So I think for we're targeting to increase the volume utilization for our water treatment plant for Apo Agua to hit around 300 MLD average. So I think, how much are we expecting for Apo Agua revenue? Do we have the numbers? I think we'll get to you later on.
Yeah, we can just get back to you on the numbers, Denise. Okay, thank you so much. The next question is on food. So how do you see the ASF impacting the farms business in 2024?
Well, ASF, I guess, well, let me say that ASF is like hard to say when it will be eradicated, right? Because the only thing that can truly eradicate it is if a vaccine is developed. Now, when will that happen? I think eventually it will happen, but it's hard for anyone to say exactly when. The other thing that will really minimize the impact of ASF is as farms continue to develop, as farms continue to modernize their operations, right? So having said that, we are repopulating and modernizing one of our existing farms. And we've got our other farms that have already gone through kind of modern upgrades. So all of the breeding operations will have already been brought up to those standards by this year.
Thank you so much. I think we have room for one final question, and this question is for Toto on CCBPI. So could you talk about the synergies that we can expect with CCBPI and the rest of the group? And given the recent acquisition, how have volumes performed in the Philippines, and what is the outlook for 2024?
In terms of the synergies, the most obvious is, of course, for Union Bank. They have a few thousand distributors who would need financing for their inventory. And even before we close this transaction, we have actually been working with Coke. So so far, I think they built a few $100 million in terms of loan portfolio. The other sources of synergies, of course, would be on the power side. We can supply them power on the industrial estates, depending on where they want to locate their bottling plants or warehouses. Then we have that option to offer to them. So basically, those three areas, in terms of synergies. On the prospects, I mentioned earlier that they did 655 million cases for 23. The objective is to hit about 700 plus million for this year. The first 2 months have been, we've been informed, has been good. They're on the record high in terms of their production. So looks like 2024 will be a good year for Coke Philippines, and hopefully they can actually even increase their ranking globally. Of course, barring any let's say inflationary period, like let's say input materials would increase, but assuming everything looks as good as it is now, it should be a record year for Coke Philippines.
Thank you so much. Hello. Thank you. Thank you so much. Okay, so with that, I would like to close with that, I would like to close our 2023 earnings briefing for Aboitiz Equity Ventures. For those of you who missed part of the session or would like to rewatch the event, we would like to remind everybody that this briefing was recorded and will be uploaded on our website as soon as possible. On behalf of the entire presentation development team and our CEOs and CFOs today, we would like to thank everyone for joining us. See you again in the first quarter briefing this April, and please join us for some refreshments outside. Until then, goodbye for now. Thank you.
Thank you, everyone.